You are now listening to The Big Trade with Peter Pham, enlightening conversations for maximum market returns.
Turney, thanks for coming on to the Big Trade series. Why don't you introduce yourself to the audience?
Sure, Peter. Thanks for having me. My name's Turney Duff, and I worked on Wall Street for 15 years. And then upon returning from my second stint at drug and alcohol rehab, I ended up writing a book called The Buy Side, which is a memoir. It's sort of a coming of age on Wall Street story. And I thought that there was a compelling story because my life and my career sort of mirrored that of the market. There were so many similarities from the time I entered, which was 94, to the time I exited, which was 2009, which in my opinion is probably the 15 most dramatic years in the history of finance.
Right. Yeah, I feel the same way, actually. I feel as if I was speaking to another gentleman. His name is Richard Mayberry. He actually talks about how guys like yourself or me, if we're in the finance business, your actually life and your finances are actually very much reflective of the economic cycle. So in the case of, say, the last 15 years, it's been a lot of different booms and busts. And I guess like at that stage around 2009, you're kind of like determining, okay, is this something that I really, really am passionate about, or do I want to explore something else? And I guess in your case, you started looking into media and journalism as well. Is that correct?
Yeah, I was a journalism major out of college. I went to Ohio University and showed up in New York City in January of 1994. And I had a giant U-Haul with a lobster on it that said America Moves from Maine. I was wearing LL Bean boots. I had a flannel on, and I was not very wise to the way of the world. And I ended up accidentally getting a job on Wall Street. So I never set out to work on Wall Street. So I don't think you could ever say it was a passion of mine. The passion really sort of came from the amount of money that I could make and the lifestyle that I could lead, and that was exciting to me. So when it came time to kind of figure out, is this something I continue doing, or do I, call an audible? In 2009, it just felt like, it was time to make a change.
I mean, your uncle must have been very well connected, because I know a lot of people on Wall Street, and like they'll rely on their like aunts and uncles, and they'll not necessarily get even an introductory, to Lehman or to doing some private wealth at Morgan Stanley. So he must have been very well connected.
Yes, but also remember, this is 1994, so. And the entire world is sort of nepotism runs pretty deep across all businesses. But in 1994, it was much easier to get a B student from Ohio University on a trading desk than, let's say, today. So
is he still working in Wall Street, by the way?
He is not. He's out in San Francisco. He's on his third wife, and he's managing his son's baseball team, and he's enjoying life.
Wow. See, when I listen to your story, I'm always thinking about those like sub stories. These are like those additional books, like Who's the Uncle, right? And
right. It's interesting that you bring that up because so my book was optioned by Sony, and they were thinking television show, and the idea was definitely very appealing, and so I took the deal, and nothing's happened as of yet, and actually Sony didn't pick up the second year of the option. But you bring up a good point, because in a television series, you would be able to sort of explore all of those secondary characters and really kind of see what happens.
Tell me about this Sony picture deal. What's that all about? And are we going to see like a motion picture on this the Buy Side book?
Well, right now there's nothing in the works. So Sony optioned it on publication date, and there was a great director attached named Michael Dinner. His big show on TV right now is Justified.
Okay.
Huge producer was attached, Mike DeLuca. He was the president of Sony, and a writer named Sheldon Turner, who was known for, he got a Golden Globe for Up in the Air, the George Clooney movie.
Right.
And they sort of sat on it and didn't really do anything with it. And then they finally went out to pitch, and every time they went to a network, they loved the pitch, but the network would say, yeah, but what about this show coming out from Showtime called Billions? So we never got a deal because all of the networks were nervous about this new show coming out at Showtime. And what's interesting or ironic, I got hired in December and January to work on the pilot of Billions with Paul Giamatti and Damian Lewis, and then I just got a deal to be the Wall Street consultant for the entire series. So, it felt like Billions was my nemesis, and now I'm working for them.
Wow, what a strange irony. Yeah. So, is Billions airing on Showtime yet?
It will be airing in January of 2016, I believe. At least that's what's set.
Okay.
The cast is amazing. The executive producers and showrunners are amazing, and all I really do is go in there and sort of authenticate and make sure that it's the real Wall Street world being portrayed.
That's an amazing gig, eh?
Yeah, no, I love film and television, so it's exciting. I'm happy to be working on the show.
Is Giovanni the lead actor in this movie?
No. You mean from Boiler Room?
Yeah, I was thinking about Boiler Room, right?
Yeah, no. So Paul Giamatti.
Okay.
Yeah, you might know him from Sideways, or he's a brilliant actor. He plays a New York district attorney, and Damian Lewis, the guy from Homeland and Band of Brothers, plays a hedge fund billionaire. So it's almost like the two worlds colliding, a sort of Wall Street world and this sort of law and order type downtown city hall type.
I think that makes the best combination, right? Because if you're going to deal with the SEC and you're going to do a bunch of things, you need a really good lawyer. I was just out in California talking to this guy that's launched a lot of ETFs, and his combination is about a Wall Street guy and a lawyer. So that seems to be the ultimate combination. Yeah,
I think they're smart to mine both worlds, because there's hundreds of cop shows, right? Or lawyer shows or whatever. So to pin all of your hopes on just a Wall Street world, it might not appeal to everyone. So I think it's a smart move.
I think the reason why it doesn't appeal to everyone is that not everyone really understands it. You know what I mean? And I know, like, probably in the case of your book too, it brings a whole, like, you're introducing kind of like the dark side of it as well.
Yes.
But I mean, there's so many different things about, like, I know you were talking about like biotech stocks and insider trading of biotech stocks before, but these are real companies that people deal with every day. So when I communicate to people about investing, it's like, hey, that iPhone that you're using, they've sold 61 million units of that in the most recent quarter. People can relate to that. Or even when talking to the opposite sex, for example, if you're talking about Victoria's Secret and, they're very well versed in like fashion and lingerie, but you can actually connect that to things like sales comps and doing basically, boots on the ground analysis, and people 100%. Really start to, yeah. So
I remember there was. I mean, this is a terrible example, but
okay.
I remember it was probably like 2008 or something, and I was working at a hedge fund called JL Berkowitz, and I didn't do any. I mean, I was the trader, right? So I wasn't doing any analytical research, and we were talking about Crocs, and Crocs was trading, I don't know, like $60 a share,
right?
And I just sat there in my portfolio manager's office, and I was like, look at them, like, it's a short, like you don't have to do any math, like, right. You know what I mean? Sometimes it's just right there in front of you.
Let's take it back to, okay, so you're doing private wealth, right? You're dealing with a bunch of high net worth individuals. You're starting to network. This is like kind of like the premise of your book, right? And how does that transition into being a dealer on the hedge fund buy side?
Sure. So I started in private wealth management, like you said, and I've told many of aspiring Wall Streeters, it's an excellent place to start in the business because you learn every product, you get all of your license, and you can kind of figure out where your next move should be. And I knew that I wanted to be on a trading desk, and I wanted to trade. I wanted that live action, the casino-like feel. Like that's where I wanted to be. And so I knew during the day I really couldn't stand out. I was out connected, I was out degreed, and I was out experienced. And so, I sort of realized that to stand out at my job, I kind of had to be creative. And one thing I learned was, during the day, the guy from Harvard and the woman from Duke, I couldn't compete. But at happy hour, they couldn't compete with me. And so I kind of said, you know what? This social aspect of Wall Street is where I thrive. And so I just tried to make as many contacts as I could and be genuine and just meet as many people as I could. And, one of the mistakes I saw some of my peers making is they would do what I called like target networking. And they would say, oh, that guy right there, he's a managing director. He calls the shots. He's going to be able to, promote me or get me my next job. Yes, maybe, but wouldn't you rather put 10 chips on 10 different numbers at the roulette wheel? So
playing the field,
right? Exactly. And so I didn't really try to determine and say, okay, this person's going to help me, and and this is how I'm going to move my way up. And I just sort of play the field, as you said. And another thing I did that was really helpful. Even when I interviewed with people and it didn't lead to a job, I tried to maintain and cultivate that relationship. So when my uncle set me up with 10 interviews on Wall Street, I let those people know, hey, I'm taking a job at Morgan Stanley, private wealth management. I'm really excited. This is my role. Thank you again for meeting with me. A year or two later, follow up with an email or a phone call. And guess what? Some of the people that I interviewed with ended up helping me, 10 years later, only because I took a small amount of time. And sitting on the trading desk at a hedge fund, I saw thousands of guys who would come in and they wanted a job. And when they kind of realized that, a job wasn't there and I wasn't going to be able to help them, I never saw or heard from them again. But a few select people maintained, that relationship. And guess what? I felt I was on a mission. Like I wasn't going to stop until I got those guys jobs, just because the way that they handled the situation.
I'm trying to turn to determine if you're a guy that I would have enjoyed hanging out with or not. In order for me to determine that, I'd have to ask you, when you're working at some of these places, did you have to be pretty politically savvy as well? Because you're openly acknowledging that, hey, maybe I didn't have the proper skill set, so it's based on my network. But, you can't be everyone's flavor of the month, right?
100%.
In a big organization, there's so many different people. So did you then have to play that political angle in the offices just to keep your job and to be able to do what you were doing?
That's probably a better question for people that I worked with, but I'll try to answer it on my own.
Okay.
It's seeing someone who's disingenuous or just a brown noser or just a climber, whatever you want to call it.
Yeah.
It's the biggest turnoff in the world, right?
Yes. I know a lot of guys like that. That's why I'm asking.
Yeah, 1,000 of them. And so I realized that. I knew that, if I wasn't genuine, then it was all for naught. And I grew up in a in a house that was heated by a wood stove in a small town in Maine. So there was plenty of naivete, and I truly did want people to like me. And so I tried to be, fun. I tried to be fair. I tried to be honest, but I'm loyal to a fault. So I would have never, burned a bridge, or I would have never, crossed someone who was good to me. So it's a tough line to toe, but I tried to do it while still being myself. And the other thing that I kind of learned, and I don't want to skip ahead, but when I got to Galleon, which a lot of people know of the Galleon Group, and
right.
My former boss is now serving 11 years, but it was so easy to. I played good cop, and I was on a trading desk with like 7 bad cops, and I'm
right.
like, this is easy. Like just say thank you, say hello to people, say good night when you're walking out the door. Like
right.
It was simple things that made me stand out.
Okay. And let's talk about that second part, because anyone that's listening, maybe they might get a little confused. I need to clarify something. Were you doing proprietary trading, or were you basically a dealer taking instructions from your portfolio manager? Because when you're talking about buying and selling stocks, the key question is the magnitude of your discretion.
Sure. So I left Morgan Stanley in 1999, and I got a job at the Galleon Group, which is a hedge fund. And so when I first got there, I was an assistant trader, and I was pretty much just executing and picking up phones and booking trades. And slowly it led to them giving me a little more discretion, and I was still sort of just trading the PM's orders or analyst orders, and eventually they gave me my own fund to kind of trade around and try to make money on my own. And what it ultimately ended up sort of turning into was I always had, I think it was 33% discretion on any position that was in the portfolio. Mm-hmm. But I better have a good reason, to sell or to add to a position if I choose to do that.
Right.
And then I always had probably about $50 million of my own money that I could take positions in. So it was sort of a hybrid of, execution trader and a prop trader. I did a lot of work with the portfolio manager on hedging the positions, risk management. So it wasn't this sort of defined role. But in terms of my other peers who were, head traders at hedge funds, I had a lot more leeway than most.
Right. Okay, so in terms of that, like you were referring to, let's get a little analytical, is you were referring to having a lot of good reasons. And I know sometimes you mentioned that you sat next to guys that were doing technical analysis, and some guys would be providing some fundamentals and stuff like that. How did you manage? Because frankly, there's even a lot of people to this day. The dirty little secret in our industry is that not too many people can generate alpha, right? And even if they're well versed.
So true.
Yeah. So how is it that with your journalism and, spending more time networking and stuff like that, you felt as if you were able to really define and create an edge for yourself for that period when you were actually doing some discretionary trading?
And this, maybe dates us a little bit, but, in the late 90s or early 2000s, it was a lot easier to get edge, which some may say is considered insider trading, and others may say it's not.
Right.
But it was very similar for me. It was very similar to that reality TV show Survivor. Mm-hmm. I had a great alliance. I had people in different spots who wanted to see me do well, who I was willing to share my information with, and we were able to all sort of be successful together. And going back to the original question though, when I said that, I better have a good reason, one thing that I learned early on in Wall Street is, right or wrong, you should have an opinion. And if you don't have an opinion, it's okay to say, I don't know. But to live in the middle and be kind of, wishy-washy, you don't stand a chance. And so when I would walk into my portfolio manager's office and say, look, hey, I just sold 200,000 shares of Amgen, I better be able to say because of A, B, and C. Like, I better have that answer prepared before I even walk into his room.
Right.
And so that's what I meant by saying I better have a good reason, to walk into a portfolio manager's office and say, yeah, I sold 50, Biogen because, it wasn't looking good. Or, I mean, maybe that is a reason, but my point was just like have an opinion and be able to clearly state what it is. But sorry, am I rambling?
No, please continue.
But so, having a good alliance was very helpful. The other thing that I was able to do was, I worked at 3 different hedge funds, Galleon, Argus Partners, and J.L. Berkowitz. And at all 3 hedge funds, I noticed, that there was a weakness or, there was an area that needed more focus. And so I typically would try to find that weakness and then go and make it my own. So at J.L. Berkowitz, they were not good at hedging and they didn't understand risk management. So I spent a lot of my time focusing on where I thought they needed the most help. And that really helped me because, all of a sudden I am now sort of adding to the bottom line. And so, and like other things, I was very aware. I talk a little bit about this in the book, but, I had a biotech analyst at Argus and I'm not even lying. Like I could set my watch by it. When a stock was going against her, let's say $1, $2, $3. And then, when she came to my desk and started to panic and said, oh my God, we have to sell it. We have to sell it. And I would say, why? Has anything fundamentally changed? And she's like, no, but it keeps going down. Soon as she left my desk, I would buy more because I knew that her panic signal was a buy signal for me. And it worked like clockwork. And so what I realized was people make the same mistakes over and over and over again. So if I know people's mistakes in the office, then I can use that to my advantage. And one day my PM came to me and he said, Turney, he's like, we have to fire Matt. And I said, what? I'm like, why? He's like, Turney, he's always wrong. Like, we have to fire him. And I said, I'm like, don't you understand? I'm like, that is gold. I'm like, nobody on Wall Street's 100% accurate. I'm like, the guy's always wrong. I'm like, that is gold. And so, I was able to do sort of things like that.
Turney, listening to all this, a lot of this is very like anecdotal, and that's great, right? And I think if I get a chance, maybe what I'll do is I'll send you a copy of my book, and maybe we'll do a swap where I'll read more of yours and you can read more of mine. What mine is about is actually those very same factors in which people, how you say opinion, and if you think about it, have you seen the movie Moneyball?
Yes, of course.
Okay, because I'm going to sell you on an idea right now. Basically, my approach to investing and trading is very similar to Moneyball, which is like quantitative analysis.
Yeah.
So it's about using statistics and probabilities rather than feelings, emotions, opinions to determine behavior. And what I discuss about is actually a lot of the fallacies in technical analysis. Because technical analysis, it sounds like it's technical, but it's actually not. It's more of like a pseudoscience. So it's like if you're using a bunch of moving averages, it's very similar to palm reading, right? Everyone has a different
crystal ball. Yeah.
Yeah, exactly. Yeah. Everyone has a different interpretation. But when you start to hammer in like the facts and figures and being able to determine what's the probability of XYZ stock going up to this, and is basically our offers being lifted because of that to confirm that, suddenly your decisions become so much more easier, in which I don't need to basically use indicators. I don't need to even look at the pictures of the charts. I don't necessarily need to use the fundamentals, although that can be very supporting. And it's all about like statistics and probabilities, about understanding the behavior of the stock. So say, for example, if, I don't know, say the San Antonio Spurs were 80% on the free throw line over the last game, then there's a high probability that they'll hit their free throws, and 20% of the time they'll miss. That very same premise and idea of thinking actually has been pretty successful for us when we're doing this hedge fund. And I highlight that a lot in the book as well. So I know there's a lot of people, like, it gets pretty sad when someone becomes almost like a leading indicator or like a good inverse indicator. And the hard thing is to replicate that. Like, where are you going to find the guy that's wrong all the time? I know there's a lot of people that are wrong all the time on the stock market, but, you know, I can't manufacture that. I can't give birth to that kid, you know what I mean, to make that happen.
You bring up a very, very interesting point also. And one of the ways that I think was able to sort of help my success was, so I know guys who 2005, 2006 killed it, right?
Yeah.
And they're big technical analysis guys. But guess what? In 2007, 2008, they got carried out.
Yeah.
And one thing I realized was that you got to keep asking yourself, what market am I in? What kind of market am I in? And it's the people who are flexible, who realize that, you know, that, oh, I do technical analysis, great, or, you know, it's only the fundamentals or whatever. It's the people who are able to sort of morph depending on what kind of market that they're trading in, are the ones who can have a sustainable, very, very long career. I don't think one sort of game plan or method will work for 10 years straight. I personally don't.
Yeah, it's actually not being as opinionated, because when you told me about coming in and having good reasons, I call that like a thesis, right? But the whole thing is, you do not want to be dogmatic about those positions, because that's going to kill you. And I think the only thing that humans are really good at that allows them not necessarily to be dogmatic is when they rely on the numbers and the statistics.
Well, and sorry, you bring up another great point. So I'm so glad we're talking. One of the things that I did, and I'm telling you, this to me was some of my greatest trades. You talk to an analyst, you talk to a portfolio manager, you talk to anyone on the street, and they make not an off the cuff remark, but, you know, something like, I mean, this is not a great example, but something like, you know, well, if Apple ever gets down to this level, and it's some ridiculous level, right?
Yeah.
But they have a reason, and they say, you know, if it ever gets to this level, I would back up the truck and I would buy every share in sight, whatever. I would write that down without them knowing, and it would just be on a nice little Post-it note. And then, sure enough, fast forward 6 months later, you know, the market's in a free fall, everything's, you know, we're going to zero, and people are freaking out. And I go to the guy and I say, hey, look, I said, you said at this level we would back up the truck. And then they start like sweating, and they're like, but, and they're like, oh, okay, buy 25. And I'm like, no, I'm like, this is the level. So what I would do is I would get people, I wouldn't get them to, but when they would say something that was profound and something that had zero emotion attached to what the screens were saying, I would write it down, and then I would hold them to it, because the truth of the matter is, when the time comes to kind of step up and really take a swing, or, you know, or put a real position on, they don't want to do it, and it's because of the screens.
I was going to say that the whole idea is that there's a big disconnect actually between price and valuation. So when that individual was giving you an example, they're basing it on valuation. But many times, based on especially like buy price targets and sell price targets, that's evaluation metrics. price is very different. Sometimes in the case of markets now, I'm thinking about the Chinese markets right now because they just doubled in the last year or so. They're acting almost like a leading indicator. The fundamentals in China are still the same, growth factors are the same, but price has actually doubled. And people sometimes don't know how to address it. So because I know you're on CNBC a lot, what CNBC does is they'll try to explain the causality of price being the particular way. And that's what all financial news and media is all about, to explain the causality of why price moved the way that it did, hoping to bridge the gap between valuation and price. So it's like Apple's this today because, quarterly earnings came out and they're fantastic. So that's why price is higher. But that's on a big news catalyst day. But say a week from now or 2 weeks from now, it will be based on, the success of Apple Watch, why Apple moved down $5, when that might not necessarily be the case. So I think that's one of the most important concepts is if you're thinking about trades, for example, and not thinking about like 10, 15-year horizons like we discussed about earlier, which no one can really forecast or predict, then you're dealing with that disconnect between price and valuation. If you're willing to wait long terms, yes, maybe valuation will reflect price, and that's why guys like Warren Buffett might actually do very well. But just my 2 cents on that as well.
Yeah, I mean, there was a time where we were considering, when I was at JL Berkowitz, we wanted to take the screens away from the analysts, and just said, don't look at the stock, Don't worry about it. Just do the analysis, and then we'll all make a decision together. But yeah, I mean, it's interesting when you throw the sort of human element of emotion into this market. That's when it gets tricky.
And when you mix personal incentive, because if you think about the role of the analysts, let's just take a sell side one, because that's much more easier to explain. The sell side one will usually base a lot of their corporate access on a particular sector or a handful of companies that they're assigned to covered. And they feel as if, how can you meet a CEO and be completely unbiased to their potential influence onto you and want to be more bearish about them, knowing that if you do so, you're basically going to lose a lot of that corporate access. And when you take a look at junior analysts, that's kind of like the conflict of interest.
100%. I mean, on the buy side, I've probably heard this over, 10,000 times, but, we would just say the sell side sucks. That's kind of what our opinion was, and the reason we would pay a Goldman Sachs or Morgan Stanley a few million in commissions was so we could meet with the company, you know what I mean, or get 10 one-on-ones at their conference. So yeah, sell side research is it's nice to have, but it was not very high on the priority list.
Yeah. Let's switch topics a little bit and discuss about insider trading for a bit. I know you kind of dabbled with that to some extent, and you've actually been very introspective about it and assessed the cost benefit and what actually went into Turney's pockets for doing such activities. What are your thoughts on that?
It's very similar to the steroid era in Major League Baseball. So. There was a period of time where it sort of felt like, the Wild West, and a lot of guys were doing it. To say that some weren't, doing it on the straight and narrow would not be accurate. There's plenty of good guys on Wall Street, but there didn't seem to be a consequence. You weren't thinking that you were Charlie Sheen dressed up as a janitor, stealing files from a law office. If you were getting a quick look or an early look on an upgrade, or sometimes you would even hear of takeovers, and at one point, I knew a guy who could tell me what was going to be on the cover of Barron's on Thursday, and that moved stocks. So it didn't feel like we were really stealing, or it felt sort of victimless. And the other idea was it felt like you were faced with this decision, do steroids and make a major league team, or don't do steroids and end up in AAA. And I'm not, that doesn't justify any of my behavior or other people's behavior, and it's not an excuse. That's how it felt. You were constantly looking for edge. That's what it felt like the job description was. And so whether you were getting your edge from your friends outside of the business, or late night in a VIP section of a club, or however you were getting your edge, that's what you needed to do. And people now see all of the headlines. I mean, we're on what, year 6 or 7 now since this all kind of started.
Yeah.
And so, everyone's seen the Purple Hawks and they've read all the bad headlines, and so people are acting as if all of a sudden, like, Wall Street is so corrupt and so evil. But the truth of the matter is, all these bad headlines and the Purple Hawks have really cleaned it up. There is a consequence now, and there's fear of getting caught. So I think that Wall Street is cleaned up more than ever. Are there still bad guys out there doing bad things? Of course, you're always going to have that. When you have an industry that is, the entire premise of the industry is money, like, I'm sorry, you can't avoid some of the warts, right?
Right.
But it's interesting because they're narrowing the definition of insider trading, and I'm not sure how smart that is. I mean, it makes sense, but the problem is, the more defined it is, the easier it will be to circumvent. So if you know the rules, then you know how to cheat. And over the last 5 years or so, no one really knew the rules, and so everyone was keeping a really, really tight ship. So, and let's not name names, right? But there are people who have not been arrested, who have been able to create a system of plausible deniability, where if my entire system is set up, say, look, I want everyone out there getting insider information for me, but when you come to me, whether you're using a code word or what, do not tell me. Do not tell me that this information is insider. And then, so technically, the guy's not doing anything wrong, right? But he's doing everything wrong. So, it's the more defined the rules become, I think it might make it easier to cheat.
Taking your concept and some of your views on that, my whole 2 cents on that is basically, I spent a lot of time in emerging and frontier markets, and it's actually even less regulated in some of these parts of the world in Asia. And, people can try to do that, but when you actually take a look at the whole, and you take a look at like all the moral hazard, malinvestment that's occurred, no one really ended up really making that much money. And yes, there are a few guys that made a lot by doing these kind of things, either front running, insider trading, factors like that. But that's, going back to your baseball analogy, that's not Ken Griffey Jr., right? And
right.
He has a record that's considered more unblemished. And it feels a lot more credible. Like, you actually get a good feeling when you think about individuals like that. Whereas when you're thinking about the people that are under question, you just really don't know. And then you just kind of wonder, like, what impact or what value is created. There's a fantastic author. He's wrote a book. He defines cheating as basically shortcuts, because that's what they are. But he also says there's another categorization called smart cuts. So there's nothing wrong with trying to be intelligent and trying to capture an opportunity. And you're right, sometimes there's going to be things that are a little bit ambiguous and a little bit more gray. And if one was smart and savvy enough, maybe they can try to, guess what the cover of Barron's is going to be. But that's more analytical, and that's using, your brains and your skill and your merits to do so. but that's a little bit more sustainable. And I think most of this conversation, a lot of the theme has been on what can be done in the short term for immediate satisfaction, gratification, and then about what can be done in the long term that can ensure like long-term sustainability. And yes, money is a big equation to all of this, but it's like what you're willing to do for that that will determine your character and integrity. So
right.
that's it seems interesting because when hearing about what you're up to and then seeing the success of the Wolf of Wall Street as well, he's going around doing a lot of like sales training now and stuff like that,
right.
and that's great. He's found a whole new second life. But I think in actuality, even if he really wanted to go into finance again, what kind of value would he offer, right? Fine, he can run a brokerage desk. He can sell like high grade equities initially. And if he stuck with that rather than just doing all the bucket shop stuff and then
right.
capturing major bid and ask spreads, he might be a fantastic broker. But that could have been much more sustainable in the long term. So I kind of like where I'm coming from. This is like, I'm actually originally from Canada, and the capital markets aren't as embraced to the magnitude as in New York and the United States.
Right.
And for me, it's kind of like you have to earn your keep if you wanted to do that, and that it's so precious that you don't want to do anything to tarnish that. So that's almost kind of like a different perspective, whereas you seem to have had a lot of those things come to you with relative ease to some extent, and that's kind of like why everything developed the way that it did, because when you're having the best parties and tons of money, it's going to corrupt a person, right?
Right. Well, I mean, the other thing about it is, I mean, insider trading, I don't know. It's like, it's not that we grew up on it, but like, if you look everywhere around yourself, right, and whether it is, I hear that my daughter's fourth grade teacher, really loves, stories about rainbows, right?
Right.
So I'm gonna tell my daughter to write a story about a rainbow, right? Like,
yeah.
I mean, that makes sense, right?
Yeah.
Or you see somebody who gets pulled over in a car, but they've got a friend of a police sticker on their car, and all of a sudden now they're not getting a ticket. Or like, let's say you have a disaster at your home, and the insurance guy comes over, and he basically hires his friend who's on the take or on the inside to do the damage. I mean, to restore the damage.
Right.
So it's like, it's not just Wall Street, it's everywhere.
It's a lot of different things. And I think it goes back to that whole comment about that actual return on investment. Because if you think about placing that one trade in which you got great insider information on, that's right. You probably could have made a lot of money on that one trade after you subtract all the other fees or who else you have to pay out. But here's the thing, is that it's not replicatable. And then it's kind of like you said, it's once you're on steroids, you kind of got to stay on it. And if you get
right.
off the juice, then it's clear that you're not on it again. And I think, like you said, if you knew your daughter's teacher likes rainbows, that's more analytical than insiders, unless someone actually told you what's going to be on the next test or something like that.
Right.
That's a little bit
right.
more insider. So it depends on what you want out of it. But I've rarely heard of people where it turns out good for them, because you could be getting really bad insider information as well, and how are you going to trust that, right?
There were times where we would say, look, if you gave us Google's earnings, if you gave us their entire facsimile of what Google's earnings were going to be,
right,
we sometimes didn't know if the stock was going up or down. We did not know.
Exactly, especially this day and age. It's not just about the earnings, the top line, and the EPS. It's also about those intangibles of what's going to happen on the conference call, which is, say, sometimes right after their earnings or sometimes in the next morning. So everything's affected, right? And then everyone's different interpretation of that. So it's very hard to call it. And you could try to use whisper numbers and it could be good, but you still don't know how the street's going to react. It could be some guidance figure that will affect it, not just the current earnings that you're getting out.
Right. Well, I mean, I've seen plenty of people lose money on inside information. And another thing, and I kind of put this out there jokingly, but I wrote an article and I said it in jest, but I was saying, you know what, if you want to stop insider trading, why don't, instead of, pinching them in Starbucks and, questioning them and doing that, why don't you go after the tippee, right? And start having them mislead or misinformation and start giving out bad inside information. Because, if I touch a hot stove once, I'm not touching it a second time. So if you start making people lose money on insider trading, they're probably going to stop. Right.
I think there's tiers to it too, right? It's probably the real insiders, the directors of the company, of those listed companies that maybe have some information or know about some stuff that will affect it, more so than some proprietary trader just trying to get a good trade. I think those are almost two different worlds.
100%. Like there's a huge difference between, my former boss getting a call from Gupta, who's a chairman on the board of Goldman Sachs, and being told that that Buffett's going to infuse $5 billion into Goldman Sachs the next day. Like, there's a big difference between that and getting a call that Amazon's being upgraded in 6 minutes. There's a huge difference.
Yep. Even at that time, though, because I remember that time, even if Buffett was, because everything was going down, even if you knew that, you'd still just want to. Like, if you wanted to dabble on that idea, it would still be just a sprinkle at that stage. If you really believe, like, okay, Buffett was going to inject some capital into Goldman, because at that stage, everyone was running scared. You'd be happy if you had some bids on the stock at that time.
Oh, yeah. I mean, yeah, those were some scary days.
Yes. All right, Turney, let's talk about the White House and compare that to Asia, because this is where all the sleazeballs like to go now to have a lot of fun. They love to go to places like Thailand. Fund managers come in all the time. When I was on the South Side, we had to fly them in, have them visit a few companies, and then you have to take them out during the nighttime. So I don't know if New York fun can now be as comparable as what's going on in Asia.
Yeah, I've never been, but yeah, I mean, being on the buy side and having, like when I was 32, 33 years old, I was making a lot of money, but the biggest thing that was sort of in my pocket was I had $50 million of commissions to give out, right, to the street. So I had hundreds of guys, trying to be in my good graces, and so. The entertaining was endless, and this has changed a little bit over the years. But the White House was just an apartment set up by some South Side guys, and anything you wanted, women, drugs, anything you wanted, and you could go over there anytime. It was almost like a private club, and there'd be tons of married dudes there, for a few hours before they had to get on the train and go to their wives and kids. And I was single at the time, and I was just like, ugh. In my mind, I was like, I would never do that if I was married.
Exactly.
But it was there for the taking, and I took a lot, but it was unlimited, and it was endless. Anything you wanted, whether it was a sporting event, a concert, a private jet to the Super Bowl, massive amounts of cocaine, women, strippers, hookers, you name it. And if you were trading enough and giving enough commissions out, there were guys willing to pay for it.
I think what's worse about it is, like I told you, in Asia, most of it's usually like the portfolio manager. Sometimes some analysts would fly over. Most of them are actually very senior, so they're like 50 plus, maybe been married for a few years, or were frankly very deprived or something like that. And it seems as if, right, they went to school all this time, and it's guys like you that maybe are more like, have higher emotional intelligence and have dealt with a lot of other people socially that, it's fun. But to these guys, it's like a candy shop because they're seeing it for the very first time and they just can't stop. And it's incredible. It's pretty bad here.
Some of those quiet ones, they're a little bit more deviant than you know. Yeah,
you can see it in their eyes, and you just know that you're gonna make what if you're on the south side at that time. You know you're gonna get some commissions from them if they're the buy side, or vice versa, basically, right? Either way, you know that there's a deal to be made in some shape or form. But it's pretty sleazy at the end of the day.
I'm sure, yeah.
Well, Turney, thanks a lot. It's been a very fun and interesting conversation. I mean, I guess here's that question. The final one is, after all that experience that you had in Wall Street, I know you're still indirectly involved in it and looking at it, but do you think, what do you think are, like, say your children said, hey, I want to go to Wall Street in the future. What are you going to say to them?
So, I've had that numerous times, whether it's my daughter or, a niece or a nephew. And basically what I say is, look, if you're passionate about the markets and this is something you truly want to do, then I'm all for it. There are so many good people working on Wall Street, and I'm grateful for the experience that I've had. Personally, it's not for me anymore. But I think it's a wonderful job. And the other thing I would say is, the education I got working on Wall Street is something that I'll take with me for the rest of my life. My work ethic is infinitely better than it ever would have been had I not worked on Wall Street. And I know how to get shit done. Like I can anticipate. I can react quickly. I make smart decisions on the fly. And so, I got that from working on Wall Street. So I think, it's a great job if you're doing it for the right reasons. And I spent 15 years of my life sort of chasing this idea of happiness. And, I tried to kind of fill this void with money and sex and power and drugs and alcohol and everything. And I was never able to sort of do that. And it wasn't until I started writing that I kind of started feeling fulfilled. So it has absolutely nothing to do with Wall Street. Wall Street didn't make me into a drug addict or make me into, a horrible person. It maybe enabled me to take things to a higher level than maybe I would have if I was a school teacher. But, Wall Street's a wonderful place. And, presently I'm just making rent every month, and I'm living on the first floor of a split level house, and I see my daughter 5 or 6 times a week, and I get some writing done, and I've never been happier. So, I'm right where I'm supposed to be. But that's not taking anything away from Wall Street.
Well, thank you, Turney. We'll keep an lookout for your, the TV series when it comes out as well.
We hope you enjoyed this mastermind session. If you'd like to contact Peter Pham or Phoenix Capital, please email info@phx-cap.com.